and let's put the spotlight on KEI Industries. The company came out with a decent set of earnings. It was a cables and wire segment that did well. The EPC was seen to be taking a backseat. But let's understand more about the internals, and for this we are being joined by Anil Gupta, who is the CMD of KEI Industries. Hi, very good morning, Mr. Gupta, and thank you so much for our time. First up, looking at your numbers, it's been a double-digit growth in terms of your top line on a YY basis, while your net profit has seen a good growth, almost 9.5% jump is what we are seeing. But help us understand what are the key drivers behind this performance, and do you expect this double-digit growth momentum to continue?
Yeah, we have seen a good growth in the revenue. We have grown by 19.8% as compared to last year. And we expect that this growth momentum to continue. It is because of the robust demand in the domestic as well as international markets that we have been able to book good orders from domestic as well as international markets. And basically from the solar energy sector, driven by solar and data centers, and also various industries, real estate and other construction sectors. So these sectors will continue to perform, and we see a lot of investment coming up in the energy sector in the coming years, especially in the power transmission, power generation, various modes, and also power distribution side. Similarly, we are seeing the industrial capex is also picking up, and we should continue to see growth in all these sectors which are related to energy production, energy transmission, or energy consumption.
Margins have slightly declined. What led to this decline, and what is your margin outlook going forward?
The margins are marginally declined because of the lot of volatility in the in the metals, especially in copper, aluminium, and also volatility in the exchange rate, which is directly impacting the metal prices. Exchange rate also impacts the material prices of all other commodities. This is the major factor that we have seen a 0.5% to 0.75% degrowth in the EBITDA margins. But we expect that when we see the whole 12-month margin of FY25, we will be able to maintain our targeted EBITDA.
All right, but Mr. Gupta, help us understand that how was the volume growth in Q3, and going forward, what is the outlook on the volume growth?
Volume growth was more than 12% in this quarter, and actually we are a little bit constrained about the capacities, but volume growth will be strong. We expect volume growth of 15 to 20% going forward, at least minimum 15%.
What are company's Capex and capacity expansion plans? Are there any plans to enter any new segment?
This year, our total Capex is expected to be around 800 to 900 crore, and similar Capex will be there in the next financial year also. This is basically in our new greenfield project coming up at Sanand near Ahmedabad, and we have no intention to add any other new line of products other than wires and cables in our business at this moment.
Mr. Gupta, talk to us about your export outlook. Are you facing any sort of challenges over there, and how is the demand outlook going forward? And also, are you planning to diversify into newer geographies?
We have seen a export growth of approximately 6% compared to last year. Actually, the growth of exports in wire and cables is much more. Last year, our export in our one of the EPC project in Africa was around more than 130 crore, which is that project is now coming to an end. So this year the billing in this quarter is only 30 crores. So although we have grown in export of cables by around 35%, but if we see the overall export, including EPC, then it is only 6%. But we will continue to see a good growth in exports in the coming quarters, and which may be more than 25 to 30% compared to last year.
But also, Mr. Gupta, help us understand the pricing environment that you are into right now, because the RM prices have been fairly volatile. Are you facing some challenges there? We understand that all of it is passed through, but how is the overall competition is intensifying? Give us a sense on that as well.
This is a competitive industry, and the overall competitive intensity is definitely remains high. But we are a preferred brand by the customers for our cables as well as the wires. So we are able to maintain our market share.
All right. Mr. Gupta, appreciate your time. Thank you for joining us. So it's always a pleasure to have you.